Hey guys, welcome to part 2 of my Bitmex series. Today we're talking about leverage and the different order types that we can use and showing you guys how to do that on testnet. Before we get started, as you can see, I currently have an open position. I completely forgot about this. I set it like a few months ago at 3,584. I've got zero point 0.2 realized profit and loss. That's just from the interest on the funding. And I've got 2 Bitcoin unrealized P&L, which is pretty amazing. I wish I had closes at $20,000, but luckily this is on the testnet and not on my actual Bitmex account, because I'd really regret not closing that at the top. But let's close that now. I'll show you guys how to close position. Just set a limit order at 11.34 for all of my contracts. So I've got 10,000, so I'm going to sell 10,000. Let's sell. So yeah, we'll see if they buy that up. I don't know if they will. If no one buys it, because this is the test net, so I know that the volume is very low. If no one buys it, we can use a market order just to sell it off, or I can amend it. I can just pull this down and amend the order. But I won't do that. I'll just wait. I'll just amend it. I don't even care. So we close that position, and now we have 3 Bitcoin. Amazing. 2 Bitcoin off that trade, and we tripled our money. Could have been much better if I had realized, but obviously this is testnet, so I don't really care. Let's see, active orders. Cancel that. Anyway, let's get into the order types. So we'll look over here. We have 3 columns: limit, market, and stop limit. Let's start with limit. So a limit order is an order to buy or sell at a given price or better. This is the most common order type. Now, when you use this limit order, you also save on fees. Instead of taking the taker fee, you get paid the maker fee, so you actually make money. So we've got 3 Bitcoin, and we want to use 1 times leverage this time. We'll talk about leverage in a second, but if you're using 1 times leverage, you're actually using the amount of money that you have. So I'm going to use 10,000 contracts on 1 times leverage. So press long, and it shows us all of the information that we need to know: order value, cost, available balance, position size after execution, mark price, liquidation price. Now this is probably the most important thing you want to look at. If Bitcoin goes down to $5,614, it will automatically close my position. All of the margin that I've put in this case 0.8, will be lost. So that's something you need to think about. If we were to short at this price, the liquidation price would be, is that 22 million? 2,222,222. So obviously, that's why I say to everyone recently a lot of people have been going to Digix DAO and Tether during these big drops in the market. It's a lot safer to do a 1 times leverage on Bitmex on futures. There's no downside, so you just go to futures and you'd set a 1 times short, and look at that huge liquidation price. You cannot possibly be liquidated, and you just hold that, and if Bitcoin does crash, you can close your position in a huge profit. So that is the most simple strategy on Bitmex, and one that I use myself. So anyway, let's set a short. Let's just short. So shorting, we'll set a limit order at 870, and we set the short. Look, it's already filling up. We can see our order here, 11,870. You can see this yellow text here. That means that my contracts are there selling. So I've got 8,000 to go. Currently filled 1,424. So wait until that fills. Liquidation price is safe, so I don't need to worry about it at all. The funding rate is positive for me, so I actually get quite a bit of money every 8 hours, sorry, just for holding this position, because we're in an uptrend, so the shorts get paid. So there's a lot of upsides for me doing this, and although this is the test net, this is quite a good trade. Really low risk with a liquidation price that can't be hit and receiving funding every 8 hours. Okay, so that's a limit order. I'll cancel that for now. Now we want to look at market orders. So click here and let's do 1,400 contracts. This is it's the fastest way to get an order into the market. It will execute at the best price present in the book. And note that latency may cause you to get a better or worse price than you expected. When the volume is really high, when people are FOMO longing and you try to long, sometimes you'll get a price like $50 higher than you should have if you'd use a limit order or just gone in before the rush. So it's very dangerous to use market orders when there's high volume and FOMO or fear in the market. But in this case, we're going to do a market short. So click market, sell. Gives me all the information. My liquidation price is 2 million something, so I'm very safe. And let's sell. So that automatically just finds the best price and increases my position to twice the size, so 2,850 now. We're in a nice little profit. Look at that. The funding cost in the next 2 hours we get 0, but in 10 hours we get 9 Bitcoin. Very nice. That's 0.009 Bitcoin. So we're going to be rich, guys. This is quite a small position, and I definitely have room for more, but this is just for demonstration purposes. Okay, so now that we know how to limit and market order, how do we close our position? Before you saw me just click market. Oh, well, I set a limit order, but then I just amended it and sold. The easiest way to do it is we could buy back 2,850 contracts. So we've sold. The way we close that is by buying back. So we're in a small profit. So we just click market buy, and it automatically closes the position. That's because we bought the same amount of contracts that we'd sold at a higher price, so we make a small profit. Another way we can do that, so let's sell again, sell market. We can do the same thing just by clicking market here. So click market, close, it will close the position. Another way we can do that, so we sell market again, we got a short position, awesome liquidation price, is we set a limit buy order. And let's go for 6, so currently at 694, let's go at 693. Let's go at 694. So we're going to buy along at that price. You can see the yellow text. I'm trying to close at that price. So it's a limit order, so I don't need to pay the take fee. I actually get paid a small maker. Get a small maker bonus fee. And yeah, they'll probably sell that to me in a second. So that will close my position slowly. Come on. That's the thing about limit. So when you close with a limit order, there's a chance that you might not close the position if no one sells it to you. Oh, look, they just sold it to me. Yep, so that's awesome. So always remember that limit is going to save you money because you don't need to pay the taker fee, and you get paid a small amount. So if you want to save money on fees, always use limit. But remember that market is much faster, and it's guaranteed to close or open your position. Another way to do what I just did, so let's sell once again. So we open a short position. We can do the same thing down here on each individual position. You can see this here. We can actually close the position using this. So all we do is just put in our limit price, so 11,600. We press close, and it opens a limit buy at 11,600. So once the price goes to there, it will close our position because we have a short position of minus 2,850 plus 2,850 equal to 0, so it makes us flat again. Okay, so that's limit and market. That took a while to explain. Sorry, guys. Next, we're going to look at stop limit. Now, stop limit is similar to a limit order, except we can place it at a price that has not been hit yet. So if we want to set a buy order, so let's just set a limit order again at 6. We'll close this position. So we market close this position. As you can see, this is the testnet, so it's all over the place. It does follow the Bitcoin price slightly, like people do, but a lot of people practicing trading strategy, so it's not The chart is very different to the actual price, the actual Bitcoin price. So we set a limit order at, say, 11,655, a buy order. So we can set that, we can move it like this. You can set this anywhere below the price. But if I was to set this limit order above where the price is, I press amend, it automatically opens my position, which is not good. Let's close that. What we want to do is we want to set a limit order above where the price is. So we expect once the price, let's say Bitcoin broke out, it went above 12,000. We think that it will keep going. To do this, we can use a stop limit order. So I'm going to go, say, 13,000. I'm 100% sure that if this goes above 13,000, then we're definitely going up. So I put my limit price, that's the price I wish to buy or sell at, and my stop price. This is basically the price where my buy or sell is executed. So in this case, 13,000. The important thing is I put this above the current price, so it doesn't trigger right now. You can just put it the same, doesn't matter. And then I press a buy stop. Make sure that this is not ticked. Close on trigger immediately. So we buy there. And if we zoom up, look, oh, we have a buy limit order above. Let's make this bigger. This is really hard to see. Magic. We have a buy order that we can move above the price. Isn't that amazing? But as soon as the last price, or this price here, goes to or above where we set this, it will trigger. And we can do the same for shorts. Like you can set a short below the current price using this stop limit. So let's get rid of that. Another thing we can do, if we had, let's say we have a long position, we've got a long position here, we can also use this as a stop loss, so a sell stop. So in that case, we'd have to have, let's go here. So by clicking on this, we can also change the price. Like you don't actually have to type it in, you can just click on there. And if we want to zoom out, we can go to order book options and we can zoom out on the price. So we can group it in, let's say, $50 increments. That's a very interesting feature that a lot of people don't know. So it's grouped in $50 increments. So 11,750, 11,800. It means we can see a lot more. So we can see there's $1 million orders at 12,300. So we want to set a stop loss at 11,200. So we click here, or we can type it in, and we want to do it for this amount of contracts. So if I just click on there, it actually changes that too. That's a cheat code. That's a cheat little tip that I learned over the years. You can just click on these numbers. But yeah, if you click on there, it automatically puts that in. If you want to be fast, this is one way to do that. Obviously, typing in makes you a lot slower. So press sell, and you will notice that my order did not close. So now I have a sell stop limit at this price. So once it hits 11,200 or lower, then it will stop. It will set a stop limit at 11,200. The problem is if we go below that really quickly, then it might miss it and I won't get to sell. There's two ways we can work around this. The first is we can put our trigger price much higher, so let's cancel that. Let's put the trigger price at 11,500. So whenever it goes below there, we set a stop limit there. So I think as soon as it hits 11,500, it's most likely going to drop. Let's test that theory. Let's put the stop price at 11,710. 700. This will probably trigger. So let's put that sell. As soon as the price hits 11,700, it should sell. Yep, look at that. So by putting the stop price a little bit higher than your limit price, you can basically guarantee that it will stop. So let's go 11,300 and set a sell stop there. Awesome. So triggers at 11,300 or below, and the stop limit is at 11,200. So that's one way to do it. Another way to guarantee that your stop actually does work is to use a stop market, which is the same thing as a stop limit, but it sells at the last price. This is 100% guaranteed, but as always, there is the risk that if the price goes down very fast, you could get a worse price than you expected. So let's say you set the stop limit at 11,300. Price goes down and we have a huge gap in the price. We dump all the way down to 10,000 something very quickly. There's a possibility that your stop will trigger at 11,200 instead of 300 if it's fast enough. And that's the problem with using a market order, because we get the same slippage that we get on a market buy. So the final stop loss and the final order type that I'm going to show you guys today is the trailing stop. This is quite an interesting one. If you're using a long, you want to use a negative value. If you're using a short, you want to use a positive value. So let's do an example. We enter a long position of 2,850. Now we want to set a trailing stop to sell 2,850 at negative $20. So what that means, let's zoom in, 5-minute chart. If the price goes below this trailing stop, or if it's equal to or below the trailing stop, then it will close my position. But because it's a trailing stop, it always stays minus 20 below the last price. So if the price increases, this stop will actually creep up and follow it. Minus 20 is a bit dangerous. Is there a way for me to edit that? Yeah, there is. Okay, so I can change that to, oh, look, it closed. So that's a bit tight. You probably, if you want to be safe, you look at the ATR and you decide a safe limit. But let's say minus 200. So 200 below our. So we're going to enter the position, a long position, and then we go to this trailing stop, and we want to set a trailing stop $200 below where we are. So it's down here, and that will actually move. Like when the price goes up, this will slowly move closer and closer. It will always stay 200 below the last price. It will move up, but it won't move down. So it will always close at this price, but if we can go above our entry, then it will actually move closer and closer and closer. So this is really good if you're away from the computer, especially for a long time, as when you get a nice entry, this is a bad entry obviously, but say that we entered at the bottom here of this current local trend, and we had a stop at 200 below. As the price goes up and up and up, our stop also moves automatically up and up and up. It never goes down, so eventually it would have gone up and up and up, and probably once we hit the high of here, our stop would be 200 below at around 11,760, and it would have stopped us out there. But yeah, trailing stop is definitely one to incorporate into your strategy. It takes a little time to get used to it, so I'd play around with maybe stop market first, and then once you get the hang of that, stop limit, and once you get the hang of that, trailing stop. So now we're going to talk about leverage. If you have any questions about what I've talked about today, you can check the references, answers all your questions. Everything is talked about in detail. You can also, if you don't understand some of these things, like you just hover over it and it has a yellow text that explains everything. If you don't understand it, try it out. This testnet is designed for trying things out, as you can see. I've already wasted a bunch of money today. But yeah, trial and error, and do not use trial and error on the actual platform. That is what testnet is for. If you want to deposit things into the testnet, it's the exact same. Just come to here, press deposit. There's a faucet that you can use. They're all here, so you would go to there and paste this address in there. Let's demonstrate this quickly, because some people don't understand this. All you do is just copy your testnet address and put it in here, and then press get bitcoins, and they'll send you some free Bitcoin to trade with. And it's not real Bitcoin, so this isn't the key to success and wealth. It's fake Bitcoin, so just don't get too excited. Okay. Yes, finally leverage. Leverage is quite simple. Let's get rid of all this just to simplify things. Right now I'm using 1 times leverage. I'm in a long position. My liquidation price is at 5,890. My margin is 0.2 Bitcoin, which, as I'm using 1 times, is equal to the notional value of my contracts. What is the point of using more or less leverage? If we have the Bitcoin, we can use it. So we can buy 2,850 contracts if we have that amount of money in Bitcoin. But if we don't, let's say we only had $1,425, we can use 2 times leverage. What does that do? So I've clicked on 2 times. Look at my liquidation price. It has now increased. So now there's more risk. If the price goes to 7,596, I will lose my margin, which is 0.12 Bitcoin. Also notice that my margin decreased by half. So now there's less margin assigned, so it's cheaper to open the position. So I don't need 0.2 Bitcoin, I only need 0.1 to open this position. If we go to 3 times, notice again, liquidation price increases, margin decreases. So it doesn't really matter which leverage we use. Like, the higher the leverage, the higher the risk that our liquidation will be hit, but the less money we're actually putting up as collateral. So we'll lose less, but we'll lose quicker. Now I want to try using a huge position. We have 3 Bitcoin, so we can use a 300 Bitcoin position, but I think the max is 200. So let's do a $100,000 position. Let's buy $100,000 worth of contracts. And we're using 10 times leverage, and our liquidation price will be 10,662. Let's buy that. We move the whole market. As you can see, the margin is very high, so we're going to lose over 10% of our portfolio, of our wallet, if this actually hits the liquidation price, which is very close and very possible to hit. Yeah, we're using $100,000, which is a lot more than we can afford to use. Yeah, well, we can afford to do this, but basically the risk is very high on this trade, and I would not recommend using these kind of risk levels. But that is what leverage can help us do. If we switch to 25 times, once again, liquidation price comes closer and margin decreases. If we switch to 50 times, this is pretty scary. 10,900, and once again it decreases. Now actually, using this huge amount of contracts, it's probably safer to use higher leverage because you're going to lose less margin. But at the same time, yeah, it's very, very risky. We could easily go down there. So for me, I'm not really loving this. If I close this position, I lose about $1,000. It's not the best. That's alright, this, guys, is not real money, but these are lessons to be learned. We never want to use this kind of risk level. You don't want to risk more than 2% of your account. 5% max. That's the kind of risk levels I would play with. A lot of people I talk to who trade real markets, they risk less than 1%. Now, if you're risking 10% of your capital, in this case I'm risking about 5%, you only need to lose 20 times in a row to lose everything. So how many times can you afford to lose in a row? That's what you need to think about on every trade. So let's close this position. I'll just leave it open. Let's increase the leverage to 10% again, 10 times, sorry. So we're risking 0.8, which is insane. Liquidation price is much nicer, so I'm not in trouble of losing everything straight away. But we'll see how that goes. And yeah, we've talked about all of these isolated leverages from 1 to 100 times. What is cross? Finally, what is cross? If we hover over cross, will it have an explanation? No. So click on cross leverage. It switches us to 3.58 times. Our new liquidation price is 8,700. Cross, basically what it does is it uses your entire wallet as margin. When I'm in isolated leverage, so let's go back to 10 times, I can actually add to my margin, so I can add margin and I can remove margin. So it's not using my whole wallet, 0.1. Let's add 0.1. Add. And that slightly decreases leverage, and increases the risk of how much we lose, but it does improve the liquidation price. If we remove the same amount, watch the liquidation price again. It goes up because we remove margin, so liquidation price goes up. It's more risky now. But what we want to do is we want to use cross. So when it hits our liquidation price of 8,723, we lose absolutely everything. So I lose 3 Bitcoin. Luckily, this is testnet, so I can just top it up whenever I want. But it allows us to have a much better liquidation price, and instead of waiting until it hits liquidation, we can now employ a stop market or a stop limit. So I'm going to set a stop loss at 11,200 and set it there. Let's move it up to where the lowest low was. So instead of waiting for it to hit our liquidation price, we can now use a stop loss instead. So that is the stop loss cross margin, cross leverage strategy. Basically, instead of relying on a liquidation price to close your position, you'll be managing it yourself with a stop loss. And this is what I do a lot of the time. I'll just go to cross leverage and I'll set up my stop losses and enter the trade. But yeah, guys, that is everything I wanted to cover today. Once again, if you want to sign up to Bitmex, I have my referral link in the description. I also leave it in the comments. You'll get 10% off fees for the first 6 months. That is something that is free for you. It's free for me. We both get a small bonus. So if you did that, that would help me out. If you learned something from this video and clicked on that link, big thanks. But yeah, it's up to you guys. Part 3, I'll be covering some basic strategies using all the stuff that we've covered in part 1 and 2. So if you've not watched part 1, go back and watch that. Sorry for the long length of this video. I basically did this live and dragged on a little bit, but there's a lot of good information in here. Anything you missed, go to references and check on that. As for this position, I'll leave it open. I'm pretty worried about losing all of my money on this, so let's decrease. Let's take it off cross. Let's put it on 10 times. So we're risking 0.8 of a Bitcoin. That's not good, guys. This is a terrible trade. And we'll put our stop loss a bit higher, so maybe 11,500, and that will trigger probably. Let's put it a bit lower. Let's be risky, guys. Let's try and make some money on this trade before part 3. I would not recommend trading like this, but yeah, we'll just do it for fun. Yeah, guys, I'll see you next time, and continue to practice the things that I taught you. Use the testnet to practice all these strategies, and we'll see you next time.